All right, this is the weekly coffee video for the week of Monday, August 12th. Before I jump into the analysis, just need to mention that we are in the midst of rolling to the December contract, which is several points higher in value than the September contract. And, I like using the continuation charts for longer term analysis, which is what we're doing here, the weekly chart. So this is a week, these are all weekly continuation charts, and they are based on volume. Um, we do have, you can see on barchart.com, December, the volume is just now recently surpassed September volume. Open interest is a little higher as well in December. So at some point this week, the full rollover will occur. So, the bottom line is we're going to start the week September, and I just want you to know that, and you can actually start trading December, by midweek. But certainly by Friday, December will be reflected on this chart. And so it gets a little complicated, a little nuanced with regard to the rollovers in commodities, obviously. We have a 99.03 channel top that's coming down at a pretty steep pace. And the directional dynamic remains bearish through the balance of August below that channel top at 99.03. And if you take a look at you've got the September contract, which closed at 97.30, but December, we're going to roll soon, is at 100.70. So, just by virtue of rollover, a December at the end of this week, if it doesn't trade lower on the week and merely trade sideways unchanged, there will be a buy signal of sorts. I don't like the the rollover based buy signals, but I still I still respect them. You almost have to, because I've seen time and time again where we roll to December, for instance, the market closes above the 99.03 channel top. It then holds as support the following week, and then the market begins to trade up. But that's all I'm really going to say about this. I'll let you nuance it. If you want to give me a buzz midweek, are we now reflected December on these long-term charts? And the answer will probably be yes. But if you want to reach out by email or give me a call and find out, I'm fine with that. But just to sort of backtrack here a little bit, it was about a month and a half ago, 2 months ago, that we essentially tested a significant zone of resistance, the top of which is 115.73, on the bottom, which is now 112.18. This formation was tested that you can see here, and that was 2 weeks in a row in early July. And so that is our ceiling. It still remains our ceiling at 112.18 up to 115.73, and you can see that in the support and resistance area on the chart. We're not going to see that this week, certainly, but I do have an upward pivot point at that 99.03 that you can see on the chart here. So if we close the week above 99.03, December contract, then the market could muster a 3 to 5 week rally back into the 112.18 to 115.73 region. But along the way, respect should be given to 104.95 and 109.05. These are both Fibonacci retracement levels. It's difficult for me to say that closing the week above 99.03 would indicate bullish continuation recovery into the 112.18 to 115.73 region. But I will say this: if you are short this market long term, and we close above 99.03 at the end of the week, December contract, that's a reason enough to at least lighten up on your short position, if not liquidate altogether. But holding below 99.03 does maintain that big picture downside objective, likely in reach by the end of September or sooner, in the 83.87 to 87.60 region, which I can show you on this chart. And here it is. You've got 87.60 as the move low from last May. And 83.87 is the channel bottom over the last year or so of activity, not quite a year. And so this is an area that remains a target and can absorb selling through the balance of the year. It's also a meaningful downside continuation point in that if we were to settle any week below the 83.87 channel structure, then the 66.52 longer term channel structure becomes a realistic, 5 to 8 week downside target, a couple of months. 66.52 able to contain selling through next year if tested anytime soon. But right now, that's way ahead of myself on that. And I'll just re-clarify. We remain heavy into September below 99.03. but we actually show a neutralization, let's call it, above 99.03. We could then test the 112, 115 area over the following month or two. But, I wouldn't. Let me finish it with one final thought. If you had no position whatsoever and we closed the week above 99.03, that would not be a strong enough signal, in my opinion, to go long into September, October under the assumption that we will reach 115, 112, 115 handle. I do think, though, and I'll finish it with this, that if we did settle the week above 99.03, that 104.95 level is likely. And let's just take a look at the chart here. You've got 106.15, 105.15. You've got some lows here at 104.45 and 10. Yeah, and so that 104.45, I believe that would be a 50% retracement. And so I think that would be your target. And we'll just take it 1 week at a time from there. And that's all that needs to be said for the weekly coffee for the week of Monday, August 12th.